Hey guys, good morning. This is Simon with TRADEnPERFORM Coaching. It's Sunday morning, October 1st. And just a quick out of the way stuff. If you have any questions for me, I want to know if you can have a 5 days visitor pass to the room. Um, I'll tell you the cost now. The cost to the room is $300 a month. Very cut and dry. When you join the room, the benefit is you get the algos on your desktop plus the live trading room. Okay, so there's my shameful marketing bit. Please know mafia about it. All trading information should be free. So what I've done here this morning is I've gotten into a little bit of a conversation, I guess is the way I put it. It all started off with a fine gentleman, although he's probably pretty salty on occasion. And he writes, so ironically, Team Green trades, right? And here he shows that under his process, you have 5 trades, 4 losers, and 1 winner. And then Mr. Anthony Crudell, who's also, or Crudeli, I don't know if I pronounced it incorrect. Please forgiveness if I got it wrong. Who's also a very fine gentleman, helps a lot of traders. And he goes, this is why win rate doesn't matter for day traders. And I disagree. That's all I'm saying. I disagree. I think psychologically, with all the emotion and all the effort and time put in, that if you have a 20% win rate, mathematically it works. I don't think it works psychologically for 90% of retail traders. So you got to remember, most retail day traders on any process fail, period. Emotional reasons, psychological reasons, underfunded reasons, I don't know what I'm doing reasons, everything under the sun. So what my pitch to most people is if you focus on one process with a high win rate and you can get the extensions, you can make a lot of money. That's the proposition. Okay. And this is why I want to show you that the response to that is usually it can't be done. It cannot be done. So normally what my chart looks like is pretty busy, but we've been in through this simplification process, right? So if you look, this is a stripped down chart. On the left, this is what we trade the NASDAQ off of. On the left is a 15 tick, which is a very fast chart, and a 24 tick that in all but the fastest markets is very manageable for most people. Okay, so normally this 15 tick chart looks like this. So you can see them side by side. A lot more colors, a lot more arrows, a lot more dots. It's just busier and it's fast. Okay. This is the simplified version of that chart on the left. And so this is for people who can operate. And what I do is I suggest we're looking for one thing on the 15 tick. And we're not trading off of it. We're retrieving the information off of it. And it's these little blue dots. Don't even pay attention to the pink bar. Just the little blue dots is all we are looking at. What the little blue dots tell you is that someone is pushing very, very hard at a location. Now, on the 24 tick, I'm going to leave everything except the pink and blue and purple bars. I'll add them back for Monday's trading. But I would argue they become a little bit less imperative than they were before. Still very important, so they'll stay there, guys, for the members watching in the room. Okay, so now we're going to go to Friday morning, right? So Friday was a pretty volatile day. And we're going to go through the process. So what I want to see, it works in Asia. I mean, it does work in Asia, but it works better in Europe, and it works very well in the U.S. session. So here's the open. Okay. So this is the chart I want to enter the trade off of over here. And I'm looking for my information here. The vertical line is where the market opens. Okay, with the normal disclaimer, 8:30 is faster and harder, 8:30 to 9 than it is after 9, right? And I generally think you should be able to make your money by 10 a.m. in the morning, Central Time, 11 Eastern. Okay, 10:30 at the latest, right? So when you look, the first thing I'm looking for is as the market is coming down, I'm looking for a blue dot. Before I do anything, I'm looking for a blue dot, and I'm looking for it on the 15. You'll see very few blue dots when the market's open to the downside on the 24. As a matter of fact, in some markets, you can go for a long time without them on either side. The blue dot's a really important component. So I'm going to mark off that blue dot. I'm just going to put a line on it right here. And so that line here, we'll turn this one green so we know where the market opened. That's what that means. And now what I am looking for is when I get that blue dot, so this is really important. This over here is what's called a range bar predictor. And on Renko bars, they're non-static the way they form. They don't form like 5-minute bars into 5-minute bar forms. It needs to move so many ticks. And so you need a little algorithm that's on Sierra chart that tells you where the bar is going to close. It's very common. There's nothing fancy about it. But what that does is it tells you where the next 24 tick bar will open. So the plan is very, very straightforward. That becomes your entry right there. Okay, so the blue line is where it told you to get ready. So as soon as I see this blue line, all I'm doing is I'm putting a limit, a buy stop, buy stop at wherever it says the next up bar will close. And I just get filled automatically. My stop is at the bottom of the bar. So on a 24 tick, it's 14,674.50 to 14,661 in a quarter. Wow, I don't know who that is. So that means my risk per contract, if I'm trading a mini, is, let's see, that's 74, 61, 15. Let's just call it 15 points in this case for easy math, which means I'm risking $300 a contract for one contract to enter here. That's how much I will lose if I'm wrong, right? So now the idea is to push to the other side of the channel and get your risk off. So the idea is I'm trading at least 2 contracts. It means I have $600 in risk. In the first place, I'm going to approximately scale off somewhere between 10 and 12 points. I scale off earlier, not exactly 1-to-1, because I have a higher than 60% win rate. Okay, but that being said, if we went 1-to-1, I need 15 points above 74. So 75, that brings up 80. I need 90. That's my 1-to-1 RR, that color right there. So that would be trade number 1 at 8:32 in the morning. And again, I have everyone from beautiful grandmas in Chicago to retired guys down in Florida to young kids from all over the country trading this, and everyone can get the order in on that 24 tick. It's not so fast that you can't get in. And the advantage is I know exactly where my stop is. I know exactly where my entry is. And I have risk management. Therefore, based on my capital, I can figure out exactly how many contracts I can trade and what the loss will be if I'm wrong, whether you're qualifying an account on Apex or Top Step or you're trading your own capital. Okay. So then once I reach this 1-to-1 target, now my goal is to get to someplace where I know the stops are. And there's a methodology for that. But needless to say, this trade eventually ran to 14.7, 13.50 if you were perfect on the exit. And of course, nobody is perfect on the exit, right? And so that would have ended up being a trade. Let's say you scaled the first at 15 points. So that means you made $300 on your first contract. And then if you exited it perfectly, which no one does, you took it 30 points, which is $600 a contract. So that's a total of $1,000 on one trade. Then for those who like to short, as the market was coming up, I get a little blue dot right here. That's where the next one shows up, this line. So now, again, I'm doing just the opposite, whether I'm using that for risk management or I want to flip around short based on my bias. So I'm going to flip this chart around. I'm just going to lock this one drawing so we know where the market opens. And then we're going to erase the rest of the lines. Okay. And then we're going to erase these lines. I don't know why these didn't erase, but we'll take care of that. Erase lines. Erase lines. And give me just 1 second. Okay, so that's trade number 1. I'm going to take you through, show you what the day looked like. So number 2, I get my up bar here. And I get the next one here. So I'm just laying into the 24. Now, if I get an algo on the 24, all the better. Either a star, arrow down, double arrow down, etc., etc. But this right here, this ends up being my next entry. And that entry would be 14,698 and a quarter to 14,713. Okay, 14,698 and a quarter to 14,713. That means that bar had a risk of 98 to 13, which is 13, 14, 15, about 16 points. Let's call it 15 for easy math, which again is going to turn into $300 a contract. So 2 contracts, I have $600 in risk, right? So if I'm insisting on a 1-to-1 scale, it means I need to get 15 points. So let's just say my entry is 98. I need 15. So that would be, let's see, it would be 98, 88, 83. That's my 1-to-1 right there. And the best I could have done on that trade, again, would have been 61. So I'm going from 98 to 61. So let's see, 98, 88, 78, 68, a little over 30 points. Let's just call it $700 a contract. So you got 700 and 300. That's $1,000 in that run. And again, this is in real time. I'm not making this up. As a matter of fact, what I'll do afterwards, I have this, I'm pretty sure I have this recorded. I may not have recorded it on Friday, but I'll find a recording and I'll post it. It will be just a short 3 or 4 minute clip. So I'll just get the exact trade and you'll see how it runs in real time, right? This is important to me because I really believe it can be done. It's not like, oh, we're making this up. So when you look up here, like when you look at this upstream over here, there's nothing to do. Why? I don't get my little blue dot. When I'm coming down here, I'm looking for the blue dot. The blue dot gives me a lot of information, right? So this is where I'm looking. So therefore, without looking to the right, my entry, here I'm going to erase these lines. There we go. My next entry is going to be right here at 14,674.50 buy stop. My risk is down to 14,658 and a quarter. So that means 64. So that's so that means 74 to 60 is 14 points plus another 2, 16 points. Okay. So I've entered. I now have my 15 points, I believe. 74, 84, 89. 1-to-1. Now realize it's not 9 a.m. yet. I have 3 profitable trades for $1,000 a piece. That's $3,000 on 2 contracts in the first hour of the day. I did not make this up as it goes along because the process repeats over and over again. Now you can go, well, Simon, what about the star down over here? Okay. To which I'm going to say there's other trades on this chart, but I'm just focusing on this one element, which is I get the blue dot up like I do over here. And now I'm looking for the next bar down. I'm sure there's a stop coming up here. That's my entry right here, 98.50. So I'm going to erase the lines again. There's the 98.50. Okay. Again, my stop on this looks like it's a 20 pointer. Let's see. 98. No, it's not. 99.8. It's 16. Okay. So again, I have to get, so from 98, I need 88, 83 roughly. Let's just call it 82, 50. This is where I have to get my 1-to-1, the green line. Stopped. Okay. So this is my first stop of the day. So that would be 3 $1,000 wins versus 1, 2 for 15, $320 loss. Okay. Let's go to our next trade. And our next trade I see is going to set up right over here, right? And I prefer longs over shorts. That's a different story. I'm going to set the blue line right there. So remember, once I have that blue line, I'm just setting my sell stop as the bar comes down. As the bar comes down. No entry yet. I'm still willing to enter. I just need the first bar down. I'm short right there. Okay, let's see if I take another stop. So that's a 28 against a 42. So that's 28, 38, 15 again. So that means now I need to get to, see, it's boring, right? It's rote. It goes over and over again in the same process. So it's, I need 15. Let's go get us 15. So 28 gives me 18 plus another 5 gives me 13. Let's just say 1250. That's where I have to get my 1-to-1 risk off. Stop. So remember, I'm up 3,000 and now I'm down 1,200. Still on a winning day. And by the way, that 8:50 to 9 o'clock standard rule in the room, very highly aggressive time of day. There was econ coming out at 9 o'clock. And we generally don't take a trade till after 9. Between 8:50 and 9, we just skip till 9 o'clock, right? But we'll just keep going through the process, taking the stops and all, right? So here's my next blue dot up. That one that was our original entry. Here's our next. So now I'm not going to, it's already 8:59 anyways. I'm going to take my next bar down. There it is. Again, this is actually right as 9 o'clock. So you're going to have a 52 against a 65, and you need going to play this out all the way through the AM session, right? So there's my stop. So now I've made 3,000, and I'm down 6, 12, $1,800. And you got to remember, 2 of those stops came right in that 8:50 to 9 o'clock, but I'm not worried about it. We're just going to keep going. Blue dot up. I'm short right here. Now, this has an algo on it. This down one has a red star algo. I'm pushing the entire trade for a 20-point scale on the first trade. That algo is really, really important right there. Okay, whether it stops or not, I'm still going to push it. So I might end up with a full stop even if it goes profitable, because I now need to get to 58.75. I need to get to 38.75 minimum before I'll take a scale. I'll just call it 38. Right, these don't matter. And my trailer with the star down on it is 40. So these are my 2 targets. So from 52, I need 12 as my next. That's target number 2. So remember, I didn't take 15. So if I get stopped on this, right? If I get stopped on this, I'll have given up my profits, and I'll have to be ready for some guys in the room for the apex trap, right? So there's fill 1, not fill 2. I get a blue dot down. Let me tell you where I would have changed this. So the alternate on the cover would have been right here on this bar, because I got the blue dot down, and I won't take the reversal bar on this. So the way that worked was I got 20 and 30 points on that trade. So 600. So 600 and 20 times 2 is 400. And then 30 times 2, 600. I got $1,000. So I'm back up $2,200. And then when I'm over here, so the way this is going to work is I get these 2 blue dots up, right? I'm not going to take this one, actually, unfortunately, at least from a pure process standpoint, because I want this to come to the top of the channel, and it's not going to do it. And that's just too bad. That's all right. I am going to be long again right here. So let me erase all this. So I think I'm up around $2,200. I'm dyslexic. Math is not my best subject. Trading is, actually. So as I'm coming down, I'm going to see the blue dot there. I'm going to be long here. No algo, right? So my long is 14,692. And so 92, 90, 05, let's just call it 07. 08 is going to be my first scale. I get it. And then my maximum favorable excursion. So remember, I'm always looking over here for the dot on the left side. So I had a potential 100-point trade there, because my entry was at 92 and it went almost to 92. The blue dots up here told me to look for the next bar down. So when I get this blue dot over here, I would have actually exited this trade right here. I doubt I would have shorted that, and I'll give you the reason why. That's an impulse move up. I'd like one more push before I shorted it. But even if I stayed on process, right? If I stayed on process, I made money, and I'm going to push this trade for 15 points. It's going to get stopped. And then, guys, this is a super trap right here. You have the star down, triangle up. That's a super trap. I would not cover this trade. This trade right here. This is a 50-point trade for me, 40-point scale. I'm going to push the daylights out of this structure. Also, if you'll look here, I get the blue dot up on the way up. I'm pressing this trade. I may get stopped, but I'm going to get stopped for 18 points or 16 points. I'm going to try and push the daylights out of that. I get stopped. I'm all right with that. I'm fine giving up 10 points on this in exchange for the 50. I'm going to keep watching through here. So now I'm automatically, if I'm willing to short, longs over shorts all the time in my room. Next bar down. Next bar down. Short there. Stop. So that's going to cost me 600 bucks. And I would take the next bar down there. Like, that's just too juicy for me not to take. So that's going to cost me another 600 bucks. Now I'm getting the blue dots up. I'm just telling you how I would have done it in real time. I know I was a little off path process there. I'm going to take the next bar down. I'm short there. And I'm going to get it this time. And again, this star on this trade means I move my scales to 20 and 40 or until I get my next reversal bar. So in this case, the way I would have done this is enter here. I'm going to scale at 20. So it's 32. So it's going to be 12. Scale 1. And then I'm going to close it out here. So that means I'm going to end up taking it 32, and my maximum favorable excursion is going to be 97. So that's going to be 32. That's 35 points, $700 a contract. And if you're trading two, that's one, 400, $700, $1,100. So, and if I would have gone off process here, I'd have done even better. And now when I'm looking for the reversal over here, I'm not going to go long if I get this blue dot down right over here, right? I'm going to end up long right here on this bar. And I don't know if I'm even going to get my 15-point scale here if we're working one-to-one. The best I can do is initially 48 to 64, 48, 58. Yeah, you get it. And then you can see it doesn't stop you out and eventually pushes you up for a much nicer trade. So, and then that's the AM. That's it. Actually, I was past the AM. The last trade you would have had would have been, for me, would have actually been this long. Like over here would have been, at 9:33 because it went straight up. It's 11 o'clock, done for the day. Get paid, go home, and have a nice day. So I believe that you can have a win rate in excess. So to be succinct. Oh, and let me show you something just to go back randomly through time. I'm going to do something really quick. I only have, oh, there we go. I have 350 days there. Let's see how many days I have over here. Oh, my computer didn't like it. We'll just give it a second. And over here, we're just going to go back like 60 days. It'll take a second to load. So you can see it's not magical. It's not just Friday and I'm cherry picking. I'm going to go pick another day. Now, while that's slow in stock places, it doesn't work. Mega fast markets and mega hard down, like December bear market. You have to be a little bit more crafty in how you use the algo. But other than that, in most situations, I would expect it to work. So I'm just going to go back randomly 60 days ago. This puts us on August 25th. We'll just choose this Tuesday, right? So some of the disadvantages is you don't get the blue dot down all the time, right? So if you looked here, I get the blue dot up. So again, I don't remember market type. Long, I definitely would have been longs over shorts. This is in July, but following the process. So you can see that whole first hour was quiet. Oh, I take it back. Not totally quiet. Let's go back here a little bit. Sorry. Let's go back. So it's 8:30 in the morning. I can tell you we were looking for longs. I wanted presses down in the bottom. I would not have shorted the first half hour during this time frame. If you've been in my room at all, you know that I preach as long as I was short after 9 o'clock, I'd be all right with it. Really, this blue dot up. I mean, that's about as trend up as you get. I'd want to see some kind of break before I short. But let's just go ahead and say you're a broken record and you can't do that, right? So I pitch you at trade number one, stop number one. I'm pretty sure this gets stopped, but let's go see. Oh, I'm wrong. You get your 15 off. 3 bars below is 15 points. And you get paid there. Okay. So now let's go through step two. Now I'm looking for a long. Here's my bar. There's the blue dot. Again, as simple as it gets. Blue dot down. I'm going to be long on this bar right here. We can eyeball it from here. See if I get my 15. Not sure I do. 20, 33. Just missed so far. And you're stopped. However, on this stop, this is a super trap. I haven't really explained this trade, but let me tell you, I'm long, and the scales are 20 and 40 minimum. Okay, so we would reset from here. The dynamic of that trade changes. So I'm looking for 34 is my first scale. Got it, and then some. Okay, super powerful. And as I'm looking here, by the way, when I get this blue dot up over here, I'm exiting my first reversal bar. So I flip and short right there, right? And I don't know if I get my 15 points. Let's see. 68 to 50, I get my 15 stopped on balance. And I'm ready to, if I'm willing to short, and again, we look at our time frames and our charts. It's not a blind mechanical system. I'm going to take the next bar down. I'd be short there at 15, 866.50, and I need 15 points on that trade for the purpose of this explanation. So let's just do this. So that's 86. Let's just call that 71 for easy math. Close enough for hand grenades. And stop. So there's my first stop of the day. Remember, the RR component's important, right? You just rip 2040, and if you trade more than 2 contracts, you ripped it out of place. And then remember, we get the blue dots again, right? So this star down, again, it's the same thing on this trap, that star down. And again, I'm shooting for 15 points. I'll come right back on it. My RR is very strong on this process, right? The goal is, look, $300 a month for a trading room is an okay amount of money, right? There's more expensive rims, but you've got to be able to pull the results out if you're going to do this, right? So again, what you're shooting for is that 15-point trade. So here's a case where I didn't take any P&L because I was looking for 20, and I get stopped. That's okay with me. Again, longs over shorts. Let me tell you why I didn't take this trade. First of all, this was my last trade of the day at 10 o'clock. I stopped trading at 10, 10:30, 9:45. I usually have my money by then, right? Most members do. And then watch, we'll go into the next day. And it works in the afternoon, by the way. But this is a case where it wouldn't have worked. See how I just don't get the blue dot up over here? Actually, I take it back. I could have taken it off of this. Here, I would have gotten stopped here, and then you come back and try again there 2 times per location. So you would have gotten your money back, and you would have ended up with that face ripper to the downside into the close. I wouldn't have because I don't hang around long enough to do it. And then we come to the next morning, right? And so let's go see what happens on Wednesday. So Wednesday's potentially Fed day here. I don't know for a fact, but I'm going to come to 8:30. Here's 8:30 a.m. Here's 8:30 a.m. Okay, so I'm looking for a blue dot. So this is the first place I'm looking for a trade, and I'm always aggressively looking for a trade early in the morning. There's my blue dot. So I have to take it twice, right? So it's easy math. Long, stop, minus 16, long again. But again, we're not talking about 20% win rate. We're batting somewhere in the low 60s to high 80s, depending on the market environment, right? I clearly get my 20 and 40 off that trade. I'm going to try and push the daylights out of this trade off the bottom to a logical target back on the other side. But this is going to stretch 78 to 24. That's $1,000 a contract. And if you're not happy with $1,000 a contract, you know, to start the day, and if you look, when you come back over here, you're getting the if you played it strictly according to the trading rules, meaning you didn't have a target above, remember we're getting long through here, right? So if you look at this, this would be technically, if I just do it completely manual once I get a trade, that's my exit, which I still end up with a 78 to 96, and I still get my 20 as my first scale. I end up with 78, 88, 98, 20, and 20. So even at worst, I end up with 20 points on each contract, which is $800, right? And that's a good deal, right? And then when I'm looking up here, if I shorted, I got stopped, right? And then I get this up again right over here. I'm going to short that. Wait, it's 854. I'm not going to short it, but we can see how it would have worked out. That's why I don't short in that time frame. So here's 9 o'clock. I'm short on the red star. I'm shooting for 20 points. Again, I don't remember the context of the environment, and so let's see if I get it. Maximum favorable excursion was 14 to 98. So you got 15, but you didn't get 20. But it didn't stop out. Let's see if we get it here. Blue dot down. I'm out right here. Got my blue dot down, which means I have to cover on this 07. So if I didn't get the 20, I'm going to cover it at 15,807 and walk out just fine. No short there. No short here because it's not high enough in the channel. Too bad. And no long here either. It's a good example where, oh, you know what? I got the long out of here. There it is. That's my long. You can only take it 2 times for risk management purposes, and you obviously got paid. So it works everywhere. I hope that made it clear. This is why I disagree with the 20% win rate thesis. You can come and ask members in the room if what I'm doing is accurate. Don't worry about what I'm trading, right? I've been doing this for over 30 years. Worry about what the members are doing, because there's a big difference. There's a big difference between what one trader can do and what one trader can teach to do or display a process to do. The important part of this is the simplicity of the process. I have people looking for one thing. And again, we can go to almost anywhere on this chart and just randomly stop here. This is, I guess I got to do it off the 30 day because I don't have enough days loaded. So we'll just randomly stop here. This is 8 a.m., right? So this is 8:42. This is obviously open drive lower. Watch. I should be able to still come out with my first 2 trades. So stop, win, right? That should still be able to take place on a regular basis. And when I mean stop, win, right? This trade, and that's open drive lower. Like I'd be screaming from the top of my lungs, caution on longs, right? And you still get 18 to 40, which is still your 20 points for scale, which even if you don't adjust your stop, and by the way, the stop gets tighter after this second bar forms. In the process, once the second bar forms, the stop goes -5 underneath the low. So the low now goes to 12 right there. That's where the stop is. So now you end up with a 20-point scale, and your balance gets stopped on 18 to 12, which is 6 points, and you're a net winner. Okay, so I believe very strongly in this. I work very hard to keep the members profitable, and I don't think you have to trade everything under the sun. You don't have to trade all the signals that the algo generates. And still, if you'll balance your aggression until you learn where you can be mega aggressive for those who trade size, there's obviously trade location, market context, etc., etc. But the process itself, to keep your head clear, you have to be able to focus on a setup that you know will give you a chance to escape the trade, right? Cut your risk, and then also gives you the opportunity for great ARR on the trailer. So that's my 2 cents. My name is Simon. This is how you get a hold of me. I'm happy to discuss this with anybody who has questions about it. within reason, not hours and hours. And if you're looking to be consistent, I encourage you to visit the room. Um, I encourage you to visit the room and see what we do. And if you don't like what we do, there's lots of other great guys out there like E-Mini Wizard, who I'll tag on this. There's um, Anthony Crudeli, I believe it is. Forgive me, Anthony, if I'm doing that wrong. And Nobes, I'm sure, despite our clashes, that he's a great guy. Just a little salty on Twitter, and certainly you can't judge a book by what you see on Twitter for sure, right? So all you guys are great. Everyone that I mentioned there is trying to help retail traders be better and be consistent, and for that, they all deserve a tip of the hat. And it's just a matter of figuring out which personality fits you best. Y'all have a great day. And how do you get a hold of me? TRADEnPERFORM at gmail.com. No fancy websites. Sorry, guys.